All right, so I'm really excited about this episode for a lot of reasons. This episode's with Don Spafford. Don is, man, his story just really resonated with me. He talked a lot about he liked doing a lot of different things. Didn't know exactly what he wanted to do. He kind of dabbled in a couple different things before finding out he didn't like it. He just he realized that real estate for he and his wife and his family, real estate was the only option, and that they had to do it. They had to make real estate work. And what's really cool about Don, so most of my guests, as the audience knows, most of my guests are actually apartment syndicators. They're multifamily experts. Don actually focuses on RV resorts. And what's really cool, my wife and I have a camper and talk a little bit about that in the interview. But for their investors, they actually let their investors stay at the property at a resort 1 week a year, totally for free. And their tagline is invest where you play, which I love. Anyway, it's a great episode with Don Spafford. Thanks for listening. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. Thank you for listening to the Passive Investors Playbook. My name is Charlie Hardage, and today I am joined by my amazing guest, Don Spafford. Don invests where he plays, and I'll get into that in just a little bit. Don has a background in finance and securities investing. He has held several management and leadership positions in his corporate finance career, as well as various volunteer service positions. He grew up most of his life around Omaha, Nebraska, but now lives in Idaho Falls, Idaho. His first investment property was a fourplex that he bought in 2017. He then began buying commercial properties, and that is when he started to scale. Don works on ground-up development projects and joined Beyonder Holdings in 2021, where his team focuses on syndicating RV resorts. He is also a partner with a build-to-rent multifamily group developing large communities. Don enjoys spending as much time as he can with his family to create lasting memories. He loves to serve and help others. His hobbies include coin and banknote collecting and traveling. He has been married for over 22 years and has 4 children. Don is also fluent in Spanish. I'm not going to use any Spanish because mine is extremely rusty, but that's very cool. Don has a very, very high moral and religious standards, and he will not bend his beliefs for anything or anyone. Don's word is his bond. He's someone you definitely want to connect with. Don, thank you so much for being here. I really appreciate it. I mentioned towards the beginning that you invest where you play, and I love that. RV resorts are so cool. We have a camper ourselves. We've been to, I don't know, dozens of RV resorts, and they're all different, but they're all just so fun and unique because you get to you live and play there, right? It's not like a hotel where you're just there and then you go out. You typically are there. So anyway, Don, really appreciate you being here. Love if you would give a little more background on who you are and your company to the audience, please.
Yeah, sure. Thank you, Charlie. Thanks for inviting me on the show and having this discussion here. So a little bit more about me. You kind of covered some of that in the intro, but as you mentioned, my background is in finance, investment science, portfolio management. I studied at the University of Nebraska at Omaha, so basically right in the shadow of Warren Buffett, which is kind of like why I kind of grew up in that culture around Berkshire Hathaway, all the meetings going on. So I was always good with numbers anyway. So I was actually drawn to investing in stocks. And even back prior to the days of the internet, I started working at 14 years old. I worked at a Dairy Queen, and I would when we get the newspapers there, I would go and look at the stock prices that were printed in newspapers, back then, just to see what's going on. And so I've always had this interest for investing and learning how you can make money work for you.
Yeah.
And so growing up from there, I kind of wasn't sure what I really wanted to do. I'm always been that type of personality where I like lots of things, so I can't really focus and say I'm going to do this and nothing else. So even for employment, perspectives, I guess, I love science, so I really wanted to go into something in physics, but I also wanted to do business, so I could get the whole investment thing going and create a business and all that kind of stuff. And so I kind of, and of course, this time again, we're talking mid 90s, late 90s. That's when kind of the internet was kind of coming up about, and programmers were the hot thing. People could handle that tech, and so I started off going to school, learning computer programming was my field I decided to go for. But I learned later that I hated it. It was completely boring, and it was not fun. Lots of stress trying to find the bugs, and like, this is dumb. So, I mean, that of course back then was very different than today. I'm sure the program today is way easier, but that time it wasn't for me. So I just did the natural, I guess, easy fallback to go into business, and just kind of general, not really knowing what yet. But then I took some time off. Actually went and served a mission for my church, and spent 2 years in Argentina, and that's kind of where I really became fluent in Spanish. And but when I came back, I had maybe a little bit more clarity, I guess, but I decided I could use that language to my advantage. So I started studying international business, and figured I could do something with some kind of international relations and things like that. But after a while of going to school, then I got married, and for whatever reason at that time, my mindset was, I now I've got a spouse to take care of and later a family. So I was like, yeah, I've got to do something now to make more money quickly. So I had this opportunity that the job I had wasn't really a great job, but they had been for a while trying to advance me to a higher position, and I always had said no, I don't want to. I'm trying to focus on school. But at this time, the wrong thinking, came into mind that I needed to make more money. So I was like, okay, I'll accept that promotion now so I can make more money. Thinking that now I've got two people in my home when I got married, that now I need to have, I'll have double expenses, or have, need to double the income or something. So of course the wrong mindset, but I didn't know better at the time, I guess. And so I took that promotion, made more money. Yeah. But now I was behind on school. And by the time later, I realized, I should have focused on school first. I ended up getting fired from that job, actually. The one and only time I've ever been fired, which I'm glad I did, honestly, because I'd been wanting to leave, but it's one of those things where I couldn't leave, so being forced out helped me to open up, to other opportunities where I later took a job that paid less, but it was in something in finance, in an investment firm, that I could then, kind of be more in that field. And luckily they paid for my tuition after that point. So I was able to go back to school and have it paid for, so I didn't come out with any student debt, and had that career in finance and investment science. And the good and bad about that, though, is by the time I finished, because I was going part-time, I finished in 2008. So kind of the worst time to graduate with a finance degree, looking for jobs in investment firms where they're all getting laid off and closing down. So I just stayed where I was at for several years after that. I just had a job, but that's kind of where it led to me getting to real estate later. Is that I kind of had this feeling that I was not living up to my potential, but I didn't know what else to really do. I could go back to school and get more degrees, get a master's degree or doctorate degree or something, but in the end, that's no guarantee for that. And it'd just be more time away from my family. And I realized, I don't want to work forever. I don't want to keep, doing a job that I don't really enjoy, or feel like I have to work to make ends meet. So as time went on, eventually, after my wife was pregnant with our fourth child, she was considering, trying to find a job, as our other three are all in school at this point. And but we want to have a job where she can be flexible to be available when the kids are sick or during summer, to not worry about daycare. And so for whatever reason, to me, the idea came up about becoming a realtor. And she actually liked that idea because she likes talking to people and figured that'd be a great way to help people and have that flexibility of work, but there's still a potentially decent income. And so she started working on that, got her license right around the time that fourth child was born. And kind of luckily, I guess, from the start, some of her very first clients were investors that were buying properties. At that point, doing what's now today known as the BRRRR strategy, where they would buy, rehab, rent, and refinance it to get their money back. And so when they kind of explained to me what they were doing at that time, I was like, wow, that's incredible. I didn't know you could do that.
Yeah.
And so kind of blew my mind a bit. I was like, wow, I gotta learn how to do this stuff and figure this out. I did not have access to capital like these people did at the time, but I was like, if you can do that, there's got to be a way to find money to do that, right? And then of course, at this time, all those house flipping shows were a big thing on TV and stuff. So I was, very motivated by that too. Um, but yet again, I didn't know how, I didn't know who, and I didn't have any money. So as time went on, I tried to learn. I started reading some books, and it got to the point where we were ready to at least try to do something. But we decided at that moment to wait because we realized that we needed to move. We were in Omaha at this time, and my mother was progressively getting sicker. We'll say she had MS and was progressing with that to the point that she was going to need more help sooner than later. So we decided to move to be close to her. So that's what brought us to Idaho, to be close to her to help take care of her. So I put all that stuff on hold for a bit. We got here and got settled in, and then kind of got back into it. And I one day happened to catch a commercial on TV for some seminar coming through town, one of these real estate groups that teach you how to flip houses or something. And so I was like, let's go check that out, right? So we went to it, and it was very interesting. I of course signed up for their like 3-day event thingy that came up because that was at least on a couple $100. Where that, of course, that's what they sell you on their bigger $50,000 program,
Yeah.
which I could not do. So glad I did not have the money to do it. But at that event, though, what was great for me is that first of all, I learned a little bit more, strategies and understanding of real estate. But more importantly, I met someone at that event who introduced me at that time to Bigger Pockets. I'm sure most people here are very familiar with Bigger Pockets at this point. It's big known company out there, but I'd not heard of it before that. So I was like, I'm gonna go check that out. I didn't know what it was. Just the name, I thought it was like a private lending program or something to get private investors to invest with you. But I later learned, of course, all the things they have, the podcasts and the forums and the calculators and all those things. Like, wow, this is amazing. So I really just dove into that and playing with those calculators. I was listening to the podcast literally every day as I would work from home at this point, because as I moved from Omaha to Idaho, I started working from home for that same company. So I would just listen to probably about 6 podcasts per day, just through my schedule. So I was learning as I was going and reading more books. Got motivated enough to give it a try and go for it. Again, I was at that point. It's like I had nothing to lose. I mean, we were in a bad situation. I made enough money for us to get by, but not really enough to really get ahead.
Yeah.
And knowing that as our kids were growing, our oldest was getting not too far from going to college. Like, we're going to have more expenses coming up soon. And if we ever had a major, medical disaster or something, we would be in a horrible situation. So I was like, if nothing changes, it's very likely we could be facing bankruptcy or something at some point, or major financial crisis, or have to go get a second job or whatever it may be. Things I didn't want to do. So I realized, from everything I'd heard and learned, as like real estate is the only option that we have to at least give it a try and see, because I've seen other people have success with it. I knew it was possible. So I just had to find a way to make it work.
Man.
And so I again used those calculators to my advantage. I started analyzing properties just to get familiar with the process and recognize the numbers, know the market. And I got to the point where I was probably analyzing about 100 properties each week. Even knowing going in, they're probably going to be bad, but it's like, at least get used to the process, understand how to underwrite them and analyze them and know the numbers. And now I can, see a property, just know instantly if it's going to be even worth my time to look at it or not. So I did that enough times that as I started searching everything, not just the MLS, which I of course had access to with my wife, but I was searching on Zillow and Craigslist and wherever I could find a listing for a property. And That's where I eventually came across that first property you mentioned, that fourplex I found on Craigslist as a for sale by owner at the time. And everything that I could see looked great. The analysis looked decent. I knew there's potential to increase the rents. And but again, the problem came down to how, right? And luckily by this point though, I already had figured out the how. I Again, through listening to the podcast, or connecting people in the forums, or just reading the forums, I should say, I learned that I could take a loan for my 401k, something I never had even considered I could do before. And then the second thing is I found a local lender in my area that would do a 10% down payment on an investment property. So I'm like, okay, I can put those two together, use my 401k loan with that 10% down payment to not have to pull too much from my 401k, and then and to make this property work. So that's what I had to do to get that first property done. And I can honestly say to anybody listening, especially if you're a new investor, I was still completely afraid. It was like literally the night before closing, I told my wife, like, should we just back out and walk away and lose our earnest money? Because I was still worried. Like, if this would go wrong, I mean, now I have money I pulled from my 401k. We could lose all that. We'd be this huge amount of debt and not be able to pay the payments. All these things could go wrong. But I went back and looked at the numbers, looked at my analysis, and I was like, you know what, these numbers work. This makes sense. It's the risk was overall pretty low. It was a somewhat newer property, like built in the late 90s, so it wasn't like a 1950s build or something. So I wasn't worried about plumbing or electrical problems or things like that. But so I was like, you know what, we've going back to that whole thing that led me to this is like, we have to give this a try. We've got to do this. It's this or the other downside of nothing else is going to change, or we're going to be in a bad spot. So I was like, we got to take that risk and go for it, and hope that it works. And so I got past that fear. I pushed past that fear just based on those the analysis of the numbers, and then just the hope, I guess, that our lives could change by doing this. And so yeah, that's all it took. And we closed, and literally the same day we closed that property, I was ready to go buy more. I just, it totally changed my mindset, and was motivated to make this work. So that's what I did. That's how I got started. Yeah.
Yeah. Wow. Lots to unpack there. And I love, I've been taking a lot of notes here, so want to hit some highlights. So you, first off, I would never go into computer programming personally. But I love that. I think our stories are very similar, Don, because I liked a whole bunch of different things. I just didn't know what I wanted to do. I like you, I fell back into business when I got out of the military. I was going to make that a career, and I couldn't anymore. And so instead of going and doing something on my own, I fell back into what I knew, which was IT sales. I wasn't necessarily passionate about it, but that's just what I knew. It was comfortable for me. And then you also you did a mission in Argentina, learned Spanish, became fluent in Spanish. Then you were focused more on international business. You didn't necessarily want a promotion, but you kind of needed it from the money side of things, which the downside of that is you focus more on work than on you and your family and school. And so you got behind in school. You said something too that really hit home with me. You felt like you were not living up to your potential. That is still something I personally struggle with kind of constantly sometimes. And, I personally deal with the imposter syndrome. But I love that you mentioned that, because I think there's a lot of listeners that probably feel the same way, that they know there's something else out there. Maybe they don't know. And you said this as well, which I was in the same boat as you. You didn't know how, you didn't know who, and you didn't have the capital, even if you knew how and who, right? And so I think a lot of people struggle with all that. And then really due more to the flexibility and where you were, you and your wife were with your 3 young kids and a 4th on the way, decided that it was best for your wife to get a job, but have all that flexibility. And it happened to be in real estate. Did you know, did you have all these, now you're an expert in real estate, but before, when you're just learning about all the benefits, why do you think, besides the flexibility, was there anything that you and your wife talked about of, hey, real estate's just such a great way to build and grow wealth, or like what drew the two of you to for her to kind of go the realtor route?
It was never about building wealth, or even really much about income, because we knew she was going to be part-time anyway.
Yeah.
It was for her, I guess for me, just because it was I from what I understood anyway, I didn't know any realtors, but I was like, well, it's potentially could be a high income, but more about that flexibility. It's like you're basically it's your own business. You're your own
Yeah.
boss. You can control your hours and work what you want to work. So we liked that aspect of it, and for her, it was much more about the relationships. She enjoys talking to people and helping people, just like I do, I guess. So for her, it was a natural fit, because she's like felt like she could help people find their first home or their dream home, or just do something to improve their lives. So that was the draw for her more than anything else, was just having that relationship business. And honestly, that's what's made her excel. And from all of her past clients, um, they love her, and they invite her to their family events and things
Cool.
like that, because um, it's not just about the transaction, right? It's about the
Yeah.
relationship.
Yeah. And we hear the term a lot, accidental landlord. That means you buy a house, and then you're looking to move, but instead of selling that house, you keep it and you rent it out, right? It sounds like you and your wife kind of became accidental investors. And because your wife was she was working with some clients that were doing the Burr method, where people buy a house, rehab it, rent it out, refinance, and repeat. And you were shocked, like, I didn't know that was a thing. Is that even legal, right? Which I remember
Yeah.
when I heard about it, I was like, that can't be real. It is. But so you guys kind of became accidental investors, I would say, just because you heard about that and you're like, man, this is great. We need to go after this.
I suppose, yeah, in a way.
Yeah.
I definitely think if she had not gotten into real estate as a realtor, I don't know if I would have had the motivation to learn more and to read more and all that. So very, very likely, I've said it before too, I think she may have been essentially the catalyst that led us to where we are now.
Yeah.
But yeah, otherwise it was not. I remember even during 2008, 2009, during that whole market crash, I was like, seeing the home prices drop, and I was like, wow, these houses that we're selling for 300,000 now for like 80,000. Like, man, that'd make a great investment. But that's as much as I knew about it. And I was like, but I can't. How could I? I didn't even understand the concept of renting it. I was just
Yeah.
like, how could I afford to hold that for years and wait for it to turn around and sell it later? So I was thinking in my mind like more like a stock kind of thing, but didn't realize that, oh yeah, I could rent it out and somebody else can pay it for me. That never clicked at that time. So it was just one of those things that was like, man, I wish I could do that, but I didn't understand how the whole process worked.
Yeah.
Otherwise, I may have found a way to get in sooner. I don't know, but that's the first thing that came to mind was that. And then when she became a realtor, it was around like 2011 or so. So these first clients were 2011, 12. So still very, very early in my I guess somewhat mindset of real estate, of what can be done there, right?
Yeah. I love that. You knew it'd be a good investment, but not for you, but for someone else, right? And
Yeah.
we live, we learn. But yeah, I also found bigger pockets probably when they were in double digit podcasts. Now I think they have 6 different podcasts, and there's like,
Yeah.
I don't know, 800 episodes of like the original. So that was definitely a big influence on me. I think the problem that I had at the time is there was so many different niches, right? Mobile home parks, apartments, flipping homes, office buildings, whatever it was. So I never, going back to, you like a lot of different things, you just didn't know what you wanted to do. I was the same way with both my life, but also with real estate.
Yeah.
You said a couple things that I really, really love. You mentioned something about real estate, because you had 4 young kids, and one was, or maybe a couple, but one was closer to going to college, and what happens if if there's a medical issue or just some issue. And so you had two options. You had don't do anything and potentially, don't want to get dramatic, but potentially bankruptcy if nothing else was really done and kind of the worst came to be, or real estate. Real estate was the only other option that you said. Why do you think that real estate was such a great option for you and your family at the time?
Well, it goes back to the only other thing that I could potentially do was to get another job. If not
Yeah,
replace my job, which is probably not likely to find. I was going to find another job that's going to pay more, but it was more like get a second job, and go work more hours and be away from the family more, and basically, kill myself trying
yeah,
to support the costs. And so I saw that once I understood that real estate can provide an income, I was like, okay, so I can get the income without working a second job or more jobs or more hours. That's what I was looking for. I mean, I was already working the job I had. I was already working overtime just to try to make more. I was working, I think on average, maybe 55 hours a week, sometimes more.
yeah,
So I was already pretty much at my physical limit of how much I could work. So I was like, I don't want to work more hours. If I can find a way to produce income without working more hours, then that sounds like a great plan to me. So that's kind of really what triggered it to really want to go after it and see if I can make it work.
yeah. I love that. Did you manage that fourplex by yourself, or did you have a property management company?
Yeah, I managed it then. I still manage it today.
Really?
Yeah, it was for me at the very start. It was partly because I did not want to add on additional costs.
Yeah,
It was cash flowing okay at the time, but if I paid a property manager on top of that, it would be almost nothing. So I was like, I've got to maintain some better cash flow from the income, but also I wanted to learn more about it. I wanted to understand the process, and that way later if I would get a property manager, I would know if they're doing a good job or not. Because
yeah,
I have no idea if they're doing a good job. I mean, I just get the reports they tell me and hope that it's okay. But I wanted to understand it better, so I'd had to run it myself for a while, and then maybe hand it over. But for me, once I learned the best processes and ways to do things, I was like, this takes almost no time for me to do this anyway. So why would I pay somebody else to do it? And I did talk to a property manager that manages some that are right next to mine, and I was already renting higher than what they're renting the other ones for. And so I asked him, would you rent this at this price? And he said, no. We'd rent them at these lower amounts to rent it out quickly. I'm like, well, I still rent them quickly at the price I'm asking. So why would I pay you to rent them for less? No,
yeah,
thanks. So I'll just keep managing it. So that's kind of why I still do it today, is for that reason. It takes, not much time at all. And I've got, at the start, I of course did a lot myself, just can't help control the costs. So I would go with my kids and we'd clean it and prepare it and do those things every time we had a turnover. But now I'm at the point I prefer my time, so I hire that stuff out now and have some handyman to do things and clean crews and all that kind of stuff. So I do very little on it myself now at this point, other than mostly placing new tenants when need to. But that since it only happens maybe once every couple of years, it's not really much of a hindrance
yeah,
to pay somebody else to do that. So
yeah. Cool. Very cool. So I know you mentioned earlier you took a loan out from your 401k,
yeah.
and that, along with a 10% down payment, allowed you to get most of the capital. I think you said maybe it was all of the capital to buy that fourplex, which you now own today. And you said that loan from the 401k, you had never heard of that except from a podcast. Is that correct?
Yeah, it was either I don't know if it's a podcast or in the forums.
Okay.
Again, on Bigger Pockets is where I heard that you could do that. Because yeah, that's not something that's commonly talked about. Even your employer or your 401k plan administrator, it's not something they openly share. Hey, you can take loans.
Yeah.
Other than maybe people might say you can use it to go buy a car or something, I guess. But so I didn't even realize that was something you could do. Otherwise, I may have tried to do that a lot sooner, right back when I was first learning things. But yeah, when I learned you could do that, and I of course investigated it and saw that there's no like penalty or fine, and the interest you pay back on it goes back into your account anyway, so I can just pay myself the interest. And seeing that the cash flow would be enough to cover that anyway. I was like, yeah, why not? I mean, this makes sense to me. And just again, understanding and knowing that, yeah, if my 401k at the time was doing fairly well. I mean, of course, coming off of that big market collapse
Yeah.
in the '08, but at this point it was recovering enough that was still doing pretty good. I'd say probably, maybe 20% gain annually or something, but maybe more than that. I don't know. I was pretty aggressive on my selections at the time, but even then I was like, if I took out this amount, which just to give some numbers, this fourplex when I bought it, I think I got it for like 270,000. So I needed like a 27,000 down payment minus the deposits, which came out to be around 25,000 or something. I was like, so, and I only took out 20,000. So knowing that this amount I'm taking out my 401k, if that were to continue, say even at a 25% annual gain, that's really not that much. It's going to really grow in the next few years versus putting into this property that could probably appreciate a lot more than that in the next few years. So I saw it as and again, it was the only way I could really do it. It's the only way I could get
Yeah.
started. I really had no other options. Either do it or don't do it. So I was like, again, I've got to take that chance and go for it. And the great thing about that, of course, I could, in that plan from when I could take out that loan, I had up to 5 years to pay it back. So I was,
Okay.
kind of, I could do shorter, but I was like, I'm going to maximize as much as I can so I can have little lowest payments to pay it back as possible, to not take too much from my check. But I was able to actually pay it back in 4 years. But in that time, again, my overall 401k value, maybe, I don't know, I don't even know how much it grew in that time. Not a lot, honestly. Nothing life changing. Versus this property appreciated, a lot more than that in that time. To the fact where I was able to do a cash out refinance on that property, just maybe a year and a half ago at this point, and pulled out probably more than what I had in my 401k from what the
Wow.
appreciation of that property, right? So I could then use that to go back and reinvest in other things. So it was definitely, looking back, I'm like, yeah, it was the smartest decision I could make at the time to get the best value out of the money I had available.
Man, I love that. And I love that the night before you're like, nope, let's not do it. And your wife's like, no, let's do it. And then 12 hours later you close and you're like, okay, let's do it again. just that complete
Yeah,
180. I love
exactly.
that.
Yeah.
Done. Okay. So I am so excited to talk about the RV place, RV resorts, and you invest in RV resorts and build to rent, which I love build to rent as well. But let's talk about our RV resorts. Like, why do you like those? Most of my guests are multifamily, apartment syndicators, but why RV resorts?
And I get that. Most people are in multifamily. It's the easy thing to go to. There's lots of them. People talk about it. You can find listings for them everywhere. But the downside to that is you have a lot more competition.
Yeah.
Therefore, the prices are higher. Your returns are slimmer. But people consider it a safe investment because people need a place to live. That's what the common saying is, I guess. So I understand that. But obviously, for that same point, you're limiting your overall returns because you're taking that safe investment. The same as like if I put money into a CD at the bank, it's safe, but therefore my return is very little. So for me, it was, going back to the whole point of why I started investing in the first place. I was trying to create that other additional streams of income. I wanted to, a few things, either one, have more income so I could help take care of my family anyway, help my kids pay for college, help with my mother's medical expenses, and things like that. I also wanted to have income coming in case something happened to me. If I were to die, I want to make sure my family is going to have some money still coming in to take care of them and not force my wife to go get a job. And ideally, in the end, my end goal was to have enough passive income to replace my income for my job so I could leave my job and have more time freedom to be with my family and enjoy them while they're still youngish before they're all grown out of the house
Yeah.
and create some memories with them. So as I was searching, for properties to buy, to invest in, I was having a difficult time finding anything that was really cash flowing well. That going back to even fourplexes, apartment buildings, anything I was looking at to buy on my own or as a JV deal, nothing was penciling out to anything that got me excited. And then I started looking into other syndications, even multifamily syndications, hoping to find something better, but I wasn't really seeing anything, better than what I was finding on my own anyway. So I started to get a little bit depressed and disappointed. That for me, I guess on average, I was seeing maybe around like a 6%, cash on cash approximately. Sometimes less than that, but we're in that range, 4 to 6, maybe up to 8%. I was like, that's okay, but it wasn't great. I'm not like, this is not going to get to me where I'm trying to get anytime soon.
Yeah.
So I was just trying to find something that could get better cash flows. Again, I had, getting the best point. Luckily, things had gone somewhat better. I had a little bit more funds available to invest with, but I still had limited funds. I don't have tons of money to go and spread out and multiple different investments. I could probably make one investment, so I need to get the most out of it that I can. And so as I was patiently looking and searching, again, luckily still listening to podcasts every day while I was working, I heard on another podcast about 2 years ago, somebody else mentioned these RV campgrounds. I was like, yeah, that's very interesting. I'd not heard of that before. This person talked about multiple income streams these properties produce, and the relatively great value that's in them. So for me, first of all, it stood out because of where I live. I'm very close to Yellowstone Park, and most of my neighbors have campers or RVs and go camping. It's a whole lifestyle here. And so I was like, there could be some potential here with people that maybe would not otherwise invest in real estate, that maybe would invest in these because it's something they understand and they use. So I started, digging deeper. I went to webinars and reaching out to people on social media that are in that space, trying to connect and learn, and just to basically try to get my foot in the door in some way or another.
Yeah.
And again, what attracted me to this was I heard that these properties can potentially produce, double-digit cash on cash, 10% or more. I was like, okay, that's at least now much better than those numbers I was seeing before, around that 6%. So, if we're looking at almost double the returns on the same amount of money, I'm like, yeah, that's gonna help me get to that goal more quickly.
Yeah.
So as I was learning about that, that's really what attracted me to want to learn more about it and get into that space. And just doing that networking, I guess, is what led me to the guys who are now my partners with Beyonder Holdings.
Wow, that's awesome. That's incredible. I personally think the pandemic forced people to get outside more, right? And maybe not hang out with big groups, but go explore more. My wife and I, we bought a camper during the pandemic because we were either at home or we wanted to be out, and we never really went. We never went camping before. I don't think we even went hiking before, and since then we've had a camper. I think this is our our fourth summer. In our camper, we've seen probably 30 states, and gone to so many different national parks, and we have a 10-year-old, and she's been to, I think it's 37 states now, and it's just been. And we still always talk about, remember when we went to Niagara Falls or to Grand Canyon and things like that. So I definitely think, that has also helped you and your team, I'm sure, just with more people getting out there. But I just love campgrounds anyway, because I think there's so much to do at most of these. And I know that's something that you and your team do too, because you're experts in the field. You're able to go and look at a campground and add pretty inexpensive amenities, but those amenities totally draw people into it, right? If there's a pool, but it's not working, we won't stay there, even if we never use it, right? We'll bring the swimsuits. We may never use it, but we won't stay there. And some of them have putt and different things like that, which never would have thought about before we got the camper. So I know you guys do that a lot, just adding different amenities like that. And so you said with that the cash on cash, which as an example, you put in $100,000, a cash on cash would be 10%. So you would get $10,000 a year, which is usually about double multifamily. Mm-hmm. So you're still seeing those numbers across the board are usually about double or so?
Yeah, well, specifically for the properties we buy, we target an average of a 12 to 15% cash on cash, right? So, so again, that $100,000 example, average of 12,000 to 15,000 per year. Again, that's the average over 5 years. So we of course we're doing things. These are value added properties, so we are increasing the value, increasing the income on the property, which therefore would increase that cash flow over time.
Yeah.
So when we take it basically as a year one, more or less turnkey as is, the cash flows aren't as much as they will be by year 5. So that average spread out over that 5 years is that 12 to 15% what we target.
Yeah, very cool.
Yeah.
And I know your company also has a fund. Is that correct?
Correct. Yes.
Can you, is that strictly for RV parks, or is that also, because I know you do build to rent as well. Is that strictly RV parks? Is it both?
Yeah. Well, the build to rent is a totally different company,
Okay.
different group. So no, it's not both. This fund is specifically for RV campgrounds and marinas.
Oh, marinas, very cool.
Yeah.
Can you talk about the fund a little bit? Like what, how long do people invest in it? Typical returns, and who can invest in there?
Sure. Yeah. So we launched the fund last November. Yeah, November
Okay.
2021. Or 2022, should say. We launched it, set to open for 1 year. So we'll be closed by November of this year.
Okay.
Either if it fills up with the capital first, that may close sooner, but by date it would close by by mid-November. It is a fund for accredited investors only. So it's unfortunately not open to everybody. We do believe in and strive to try to help people to become accredited investors. Our first 4 properties we closed on were all for non-accredited investors. Had the opportunity to get into those. But the downside with non-accredited offerings is that you cannot publicly advertise them. So it's hard to get the word out, and unless you have a large investor base to begin with, it's really hard to promote those to get the funds you need. So we part of the reason why we launched the fund was for that aspect. We could help, therefore, promote our brand and our business to help more people become aware of what we're doing. So that way they are in our investor database, even if they're not accredited investors now. We may have deals at some point down the road where they could invest in, or at some point they become later an accredited investor that at least now know about us. So that's kind of partly of why we launched this fund. And so far it's been going great. We closed on our first property in it last December. We've got another one we're closing on actually in August, so next month, and several more that are in our pipeline coming up. So the plan is this fund will hold several properties within it. Therefore, have we'll say, I guess, a combined force of all those properties working together to make sure we hit those return numbers for investors, and kind of I guess lower the overall risk. If we're in any one single property and that property gets hit with a hurricane or tornado or something that causes major damage, like you're saying, if the things they manage aren't working, nobody's going to stay there. So
right.
Until those things would get fixed through the insurance, which may take some time, there could be no cash flow on that property. So if we have multiple ones in that fund, the other ones should hopefully be still operating and producing. So that you kind of reduce that risk of withholding those distributions for a time. But also what's great about it is, anybody that invests with us, we actually provide the opportunity for our investors to go to our properties. We want you to go there. We want you to enjoy it and have that experience. We have a 1 week free stay per year for our investors and discounts throughout the rest of the year after that. So again, the whole point is that we want you to go there and create those memories, like you said, and say, yeah, I remember when we went to the Beyond Marina at Sterrett Creek, or the Beyond Resort at whatever. So we want you to go there and enjoy it, and then go tell your friends about it, right? Talk to your friends and family, and give the cool thing about it. Why I use this tagline, invest where you play, or even play where you invest, if you want to flip around. But it's like, this, you invest in a multifamily or self-storage or something, that's great. You've got the income, you're growing your wealth, but that's about it. You're only getting enjoyment from it. Whereas in this, we want you to have that experience and enjoy it, and you actually can go there and hang out, have a good time, go to a concert, go play in the lake, on an aqua park, or go boating, fishing, hiking, horseback riding, whatever it may be. Have those experiences with the property, with your investment. It makes you enjoy it that much better. And on top of that, when you're making money on it, it's it gives you a great talking point when you're sitting around a campfire with your friends, and talking about how you're a partner in this property, and get them discussing finance and investing, so it's a great experience that you can get with it.
Man, that's very cool. So if you invest with Don and his team, you get a free week there, and you'll get some passive income too while you're staying there. That's awesome.
Right.
And Don, you mentioned something a few times, and just for the audience, can you explain what a accredited investor is?
Sure. It's I guess it's definition given by the SEC, right? So it's not just
Mhm.
a thing people throw out there. The SEC regulates this, but there's three ways to be considered an accredited investor. Most people only talk about the first two, which is based on your income. Either you as a single person has at least 200,000 of income over the last 2 years, with seeing that for, I guess continue for the foreseeable future, or as a couple 300,000 of income. The other version, which probably more people will qualify with, is your net worth. If you have a net worth over $1 million, not including your primary residence, so your other investment properties, your retirement account, all those things can be included in that. Over $1 million, then you could be considered an accredited investor. Which, of course, basically what that term just means is the government considers you sophisticated enough to know the risks you are taking with investing, that they won't put you at the financial risk of becoming broke. But the third option that people may not be aware of is that you can also be considered a accredited investor if you have a securities license. So you are a financial, FINRA securities license, Series 7 or Series 7, Series 65, and I think it's a Series 82. Is that the third one? So if you have one of those licenses, then you are also therefore considered knowledgeable enough to make investment decisions, and you can therefore invest. So for me, that was actually a pretty big I guess epiphany, maybe, as I talked to, again, my past work experience working in that investment industry. Many of the people I worked with held those securities licenses, but they were not qualifying income or net worth. And so I was talking to, actually, the same week, maybe about a month ago, two different people that I helped them to realize that they are an accredited investor because they hold a Series 7 or 65 license. And so it's like, hey, congrats, you are accredited. You can invest now. You don't have to wait to build up your net worth or whatever. So that's a great thing that I think more people should be aware of and know about. That even an average person, if they were really wanted to accelerate that status, they could take those courses and take those tests and get that license themselves, rather than waiting to increase your income or increase your net worth. So it could be a potential option for people that want to get to that level sooner.
Very cool. I love that. Yeah, and I know most people don't know about that third option. I actually only heard about it last week, I think, or maybe it was 2 weeks ago. And I've been in real estate for 7 years. So anyway, yeah, thank you for pointing that out, though, Don. So I know we have a few minutes left. I want to ask you about a recent book that you have read or listened to that stands out. I know you listen to podcasts a lot. Do you have a book that you've read or listened to that really stands out?
Boy, I so when I first started out, like I said, I was reading a lot of books because I didn't really have anything else to do. So I was either or listen to podcasts or read books, and so I did a lot of that. Recently, I do a lot less book reading only because I don't have time.
Yeah.
I'm on a lot more investor calls that takes up my time. So when I can read, I do like to still read. The one I've read most recently, and the thing is, I still buy books. So I come across things that, hey, that sounds like it could be a great thing to read. So I'll get it ordered. I'll put it in my stack of books to get to at some point. But right now, the most recent one I read was actually the Win-Win Wealth Strategy. 7 investments the government will pay you to make, by Tom Wheelwright.
Cool.
So that's one that I like a lot. Again, going off maybe just because my background, I like numbers and things. I enjoy reading those kinds of tax books that you can learn about tax strategies and things you can use to not only just to build wealth and create wealth, but also to save yourself from paying taxes you don't have to pay. People always complain about that the rich don't pay their taxes or whatever. Well, it's not necessarily the case. I mean, the government is actually designed to have you not pay taxes if you know how to play by the rules and use the things they have in place to do that. So, and so that information is out there, like in these books, for example, that you can learn and see what you can do to improve your tax situation to not have to pay as much taxes.
Very cool. And that was Win-Win Wealth Strategy by Tom Wheelwright. Tom Wheelwright, very, very well known in the real estate space, and Rich Dad Advisor.
His other book, The Tax-Free Wealth, is also a great one to read as well. So, yeah,
very cool. What can people expect to see from you and your business over the next few years, Don?
I think we're, I guess, still relatively a newer company, right? We haven't been around that long. We've still done quite a bit. We're still growing. Knowing where we're at right now and the things that are kind of falling into place, kind of an internal thing that not everybody can see from the outside, but we're making some very strategic partnerships, maybe alliances and things to help really propel us to the next level. We know we can only do so much on our own, but to grow, you have to expand, and you got to bring on more people and help you to get there. So we're making a lot of great commitments right now that is going to help us launch us into I'd say like the stratosphere, right? We have a goal, like our 10-year goal is to own at least 100 properties. So that's basically 10 properties per year over the next 10 years. This year, with these things happening at the beginning of the year for the economy, people are afraid of the recession and bank failures and that kind of stuff. It definitely affected the overall investment or the investor mindset.
Yeah.
People are holding on to money, but that's kind of turning around right now. But even with that kind of forced me anyway to go out and seek other sources of capital. So we're talking, institutional wealth, like the
Okay.
large private equities or family office type of money. We've now made some of those connections and know that going forward, we won't have to worry about if we're going to be able to raise capital to close the deal or not. And so once this kind of all starts moving and getting momentum with that, we're going to start pursuing larger properties that can, that right now we know we couldn't close on because we would not be able to raise, 50 million or whatever. But
Yeah.
if we, once this stuff falls into place and that starts happening, I mean, the potential for huge growth is right there. And so, and I don't know what that could be. Some points, a lot of these institutional money don't like having other investors in their deals. They want to be the only investor. So,
Yep.
not that we wanted to close off investment to other, retail investors, but if that were to be the case, there may be a lot less opportunities for retail investors to invest with us. We'd be doing a lot more with those groups. So I'd say for somebody that wants to get in now, while these prices are great, the returns are great, now is the time to take action and learn and get ready, because not only are we going to grow and there's going to be a huge potential there, but there's a lot more other people that are having their eyes open to this asset class.
Yep.
There's I see more posts every day of other people saying, "Oh, we bought an RV park or something." So people are realizing the returns that are there that are so great right now that 5 years from now may not be so great, as it
Right.
becomes oversaturated with people, paying more to get these properties, and those returns are going to go down. So right now is the best time to take action and get the highest return you can get on it.
Awesome. Very cool. Don, what's the best way that people can reach out to you?
It's probably easiest to find me on LinkedIn. I'm very
Okay.
active there. So search me on LinkedIn, and connect with me there. Feel free to send me a connection invite, send me a direct message. I enjoy talking to people. I'm happy to set up a call. You can also email me at don@beyondercamp.com. And yeah, that's probably the easiest way to find me is those two methods. And I will respond, and I will love to talk to you.
Cool. And I'll make sure that's in the show notes. I'll put your website, your email. I know you're on LinkedIn, like you said, and Facebook as well. And then I know one last thing, Don, you guys are doing monthly webinars. Is that right? Can you talk about what that looks like and what's that for?
Yeah, so we've been pretty much ever since we launched this fund back in November. We decided to hold a monthly webinar to discuss the fund itself, the progress, the things that are happening, the properties we close on. That way we can kind of, again, go back to that, taking full advantage of this 506C accredited investor offering to do as much as we can to promote it, besides just posting on social media and emails like, hey, let's do these monthly webinars to invite people to come in and listen and learn. If somebody that may be maybe not ready to have a direct one-on-one conversation call, they can come to these webinars and still learn more about what we're doing, understand the process, understand how we're getting those returns we're getting. And we, of course, we cover the properties we have already closed on and how they're performing. We cover the properties that we are working on closing soon. So you kind of see what's coming into the fund. And so we've been doing those monthly. And addition to that, we also hold a quarterly Q&A webinar, where it's kind of more for our actual investors that are investing with us, but the public is welcome to join too. But that's where, again, we can cover how the fund has been performing so far, the properties, what they're doing, and allows an open forum for investors just to come on and ask questions, publicly, and we'll answer them to your live. So that's kind of what we've been doing to kind of help maintain that higher level of communication, besides our monthly newsletters that we send out and all that. But We want to help people see what we're doing and how investing with us is going to help them reach their financial goals.
That's awesome. And is that something that people can find on your website, the link to the webinar, or how do they find that?
Yeah, we usually each month we'll post the new link there on there. But to be the best way is just actually register on our website. There's no obligation to register in our investor portal. Just gives you access to see more information. It gives you access to see the full financials, details, and everything. But then you'll be in our email list to get those webinar links when they're sent out by email each month. But also if you're following me on LinkedIn, I usually post about them there as well in Facebook. So one of those methods, you'll be able to find it and learn about it and come to the next one.
Cool. Man, Don, thank you. I really appreciated talking to you, and I love your tagline, invest where you play, or play where you invest. I love that. RV parks, and maybe park is the wrong word, but resorts, RV resorts have had a huge impact on just our life as a family, just from having fun and making memories. And I just love that asset class, and the fact that you guys offer a free week is really cool. I love that. But thank you so much for being here. It's been an honor talking to you. Yeah,
thank you. My pleasure. I'm glad that people can hear your perspective as somebody that actually uses these types of properties, that they can hear that, okay, yeah, people actually do go there. They do enjoy it, right? So
go ahead.
Yeah. No, I want to say more people need to hear that and understand that. I tell people, if you've never stepped foot on a campground before ever, just go visit one. Google it in your area, find again, like a full-on, like family-friendly resort that has activities. Just go there on a Saturday and park and walk around and just look and see what's going on. And then it might help give a better perspective of exactly how these properties do so well and give you those returns. Because if you're looking to go camp at one, you need probably a year advance of making a reservation to get there, because they're always booked and hard to just pull up and go there. So go check it out.
Yeah, they can be really, so it's funny because some of them are very basic and people just stay a night or two and leave, and then there's some that it's like, wow, I actually took a vacation just to stay here. So
exactly.
Yes. Love that. But Don, thank you so much for being here. Have a great day.
My pleasure. Thanks a lot.
All right. Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.